Hello, welcome back to Laptop Trader channel on YouTube. My name is Phil and I'll be hosting this month's presentation. Again, I'm here to give back to the stock trading community one video at a time. Football season is back, so hopefully that's a good thing. Congrats to the Cyclones today. Close game, but somebody had to win and somebody had to lose. Anyway, this channel is mainly for newer traders, but all are welcome to watch. I publish monthly videos that cover different aspects of stock market trading, and then how to create confidence by putting the odds in your favor. So good luck to you. I believe in being my own investor and trader and not leaving this up to others to do it for me. My email contact is laptoptraderphil@gmail.com. This video is for information only and should not be considered investing advice. Trade at your own risk. Most stock traders lose money. Please protect yourself at all times. So let's get to it. September agenda. What is confidence? How to build a confidence in trading. This is a much longer topic, but it's a foundational topic to my trading and investing. And if you don't have confidence, if you have confidence, actually, you won't need me for any stock ideas. You'll be able to find these for yourself. The charts for this month will be at the end of this video, as this is going to be a longer video. We'll review the markets at the end of this topic. I'll give you guys a few stock ideas for September at the end. And what I want you to take away from this, two takeaways from this lesson, is get the big picture of the market, how it works, and then leave yourself a way out if you're wrong. So start now by educating yourself on how markets work and finding out what is right for you. Invest in yourself and then invest in the markets. So confidence, what is it? Where does it come from? And how can I use it in trading, business, and in life? What's confidence? Well, it's hard to describe, but I have it now. I did not always have it in trading, even though I thought I did have confidence, until I would have a setback and then it would go away. Then we have to almost start over and build confidence back up again. Does this sound familiar to you? In its basic definition, I would say it is emotional and psychological in nature. It's something inside of you. You either have it at this time for this skill or this task, or you don't, or confidence is lacking in some way of what it could be. You could be confident in gardening, for example. You seem to have a green thumb, your plants look great, and the flowers are in bloom. Or maybe you don't have confidence in gardening and you planted some new plants this spring for the first time, and you were excited to see some new color in your yard, but with a lack of experience and maybe a lack of rain, your plants did not do well. They did not bloom, and you feel like you wasted a lot of time, and you do not know really what went wrong. Can you see the difference? How outcome affect your confidence? You may have did everything correctly with soil and water and sun and plant selection, but the result lowered or raised your confidence. You expected a certain result, and if your expectations were met or not met, this affected your feeling of confidence. So expectation and outcome are probably, in my opinion, the two biggest factors in gaining or losing confidence. So the task at hand may or may not be difficult, but regardless, you know either yes, I can do it, or no, I cannot right away. Confidence is again emotional and psychological nature and affected by our expectations and the outcome or the result of our actions and the thoughts tied to those results. Okay, you may have high confidence in speaking to an audience, or you may be very scared to talk in front of people, and it may affect you physically, where your voice changes, or maybe you're shaking inside or even sweating. So your thoughts and your actions can affect your physical state too. So we all have kind of a unique makeup, and we have skills based on our life experiences, and will generally be more confident in some areas or skills versus others. Some of us are mechanical and some of us are not. Some of us want to or need to be around people. We're and we're outgoing, and some of us are more introverted and would do better working alone. So you get the point. We all have a unique makeup that we have to deal with. An example would be a baseball pitcher such as Nolan Ryan, who had a very high confidence when pitching to highly skilled hitters. He expected to win. He was going to win in his mind, and he worked very hard in practice and trained for the big game. Of course, he had losses too. So how do we gain or increase our confidence, right? This is the big question. Well, if you've had some success in business or in trading, then your confidence should have increased, and if you have not, then your confidence probably went down. This could be over any time period. To gain confidence, then we need to first understand where are we at now. Are we at like a level 0, a brand new trader, or have we had some experience and we had some wins and some losses and maybe a break even? We are a break even trader and are looking for that next step in the journey. Or maybe we're level, let's say 5 out of 10, and we want to go to the next level and increase our success. So where are we at now? We need to be honest about where we're at now with our skill level and therefore our confidence to go forward and implement a business plan or a trading plan. So what have we done so far? Right? Have we tracked our progress so far? Do we have some data we can analyze to give ourselves or someone else to look at and actually grade our work and actually try to be objective about it? What is my current level of confidence? Do you feel that you can function in most or all market environments and for your style of trading per your plan? Do you even have a plan yet? What are you good at or what are you comfortable with at this time? So a quick example of that would be, I'm not good at or even comfortable with, which is why I don't do it. I choose not to short stocks. So because that takes some special requirements to short stocks. So I just would rather trade the market long. That's what I do. So again, for example, myself, I had basic confidence when I first started trading options. I understood the concept and the math and how I should. In other words, I expected to make money. After about 6 months, I had lost about $1,400 trading options. Not a huge amount of money, but enough of a loss to lose my confidence in that particular trading technique. To me at the time, it was a good amount of money, but more importantly, I had to stop trading, which I liked to do and I wanted and desired to be good at. But I had to reassess what I was doing and how I was going about the business of trading options. This unfortunately happens to most new options traders and most day traders who trade individual stocks or securities. I was forced like most traders because I had to stop. I ran out of money or trading capital. I was disciplined enough not to use credit or credit cards or margin or take money out of my house with a loan, which is stupid. It is better to just stop where you're at now and evaluate what is wrong, what did I do wrong, what can I do differently to try for a different result next time. Now our brain automatically is doing this for us every day through simple daily tasks, usually through our response to our environment, right? If it feels cold out, we would naturally change our clothing to something warmer, maybe a long sleeve shirt or maybe a jacket. If we drink something that is too hot, we would reassess and wait until the drink cools down. So we're naturally wired to make change if something isn't right, but sometimes in trading, some traders simply just don't do that. So when I reevaluated and saved money to recapitalize my trading account, it was kind of a gift to have tried to trade and lost money because, again, it forced me to rethink what I was doing, right? What did I do wrong? So I started studying and reading about and learning about successful stock traders, right? What did they do? One thing they all had in common, regardless of background or account size, or even their style or trading technique, was they all had confidence in their plan and they all used very strict rules when it came to taking risk and managing their business of trading. A close third trait that I noticed was most of these traders most, not all, did not have immediate success and also struggled for many years to have confidence in trading. If they did have some immediate success, almost all had some serious setbacks along the way, including account drawdowns and or blowing up their accounts and running out of capital. One famous trader that comes to mind is Christian Kalamagi, who blew up 3 or more accounts early on and then changed his style and traded $10,000 up to $100 million plus in a period of years. So I would encourage you to review his story because there's a lot of lessons there. My personal story is a little less dramatic, but more of kind of one step forward, 2 steps back, to reference an old saying. Again, I opened an account to trade, then I lost that account, then I had to study, then I had to recapitalize, then I opened an account again, traded for about 2 years, I had some success in growing an account, then I had a drawdown in the 2022 bear market, but I didn't blow it up this time, but it was still a setback and losing money. So I was like, well, why is all this happening? So because my plan is set up for an uptrending or appreciating market, and I did not adapt well to this downtrending market. Luckily, I did not get too confident or cocky, and I kept my day job. I simply did not think or expect 2022 to last all year into 2023. Well, then the market recovered, and the bull market, uptrending market returned, and I started to see some small success again, and my confidence grew. And just as important, I took more notes and more study time as to what could I do different going forward. So my experience and then my confidence grew. For me, this series of ups and downs had made me a better, more objective trader and overall a more objective person. I felt inside I could do it, even if I did not have huge success. Well, fast forward to 2024, and at the end of the year, the market made an unexpected turn down in December. This time, not only was I ready for it with risk and trade management, but I quickly recognized this was not right by looking and studying technical price charts. I made a video warning my subscribers to this change in market behavior or the market context. So something changed, and I wanted to alert people we should be careful at this time. This observation gave me more confidence as I was proven right over the next several months that we were indeed in a market downturn for some period of time. We didn't know how long. So the result of my observations and my actions in reducing my risk and my exposure to the market and my reduction in my position sizes all reinforced my confidence that I was indeed right in taking these actions. Even though this period was overall a break-even time for me, in other words, I did not make or lose money, the increase in confidence was huge for me because I preserved my capital for the next time the market and individual stocks started to move in an uptrend again. This is a big lesson in trading, believe it or not. Capital preservation. Can you ride out a time when things are not going to plan? Can you come out of the battle against yourself without losing money or minimizing your losses? The old saying is live to fight another day. Why? Because if you have big losses versus small losses or break-even trades, those big losses via big drawdowns in your account can cause a big loss in confidence when you see you are losing money. Nobody likes to lose. It does not feel good, and losing money, I think, is even worse. You could have at least bought a good time, or a good meal with friends, or went somewhere fun, or purchased something you were saving for. It's like a double loss when you start thinking about it. It will affect your psychology. Keep your losses to a minimum is another huge key to success in trading and in life. So now in 2025, we have seen the market turn up in April, and since that time, my account is up. Most of my trades are at least positive, with some doing very, very well, and my confidence is up and reinforced by these results. These results were based on my expectations that if the market turns up, my trades should also perform better in that environment. And that is what happened. Expectation was met with the proper result, therefore, confidence is high at this time. And so when we look at the market or any stock chart, we can see human emotion on display with different sized bars, candles, and it makes sense why a large red bar would equal fear in the market and would cause people to panic and sell even more. If we see a large green bar on a chart, we can see that at that time people had confidence at that price to make a purchase with some confidence in their decision. And another indication, of this is volume. How much did they purchase or sell at that time? Was there enough confidence to actually cause prices to move up or down? Was there enough pressure to move prices to new highs or new lows? These are great clues as a price detective as to what is really going on in the market, regardless of news, opinions, speculation, what a CEO says, algorithms, high frequency trading, etc. People are still programming the computers, and emotion is in those programs. Price and volume at a point in time is the truth as to what people actually did with their money. Money talks and BS walks, as they say. By knowing this and understanding our emotions and our expectations and our confidence, we can use this to our advantage. We can actually have a trading plan that takes into account what to do with a high or low confidence situation. This is regardless of your experience, as confidence affects everybody. I want to share with you now a few more details. In January, I had a 47% win rate, but lost a few bucks. Then in February, I had 7 losing trades in a row. Then my account started to recover over the next several months with good decisions, keeping my losses small and reducing my risk up front, and I was having positive results making money. Then in July, I had 16 of 20 trades stop out. My stop loss orders triggered, and so my losses, though many, were still small. Over this period of 9 months this year, my account actually grew, and so this again reinforced my confidence. We as people need to have our confidence supported in any field of study or profession, or it simply is not going to work. We can only afford, both in monetary terms and psychologically, so many losses and so much pain. It's the human condition. Now, I know this is a lot of words and not a lot of charts, but it is extremely important that you understand this, as this business, especially day trading, which I do not do, I'm more of a position trader, for my own reasons, is extremely dangerous and has a very high failure rate, maybe the most of any business. It is statistically riskier than owning and operating a restaurant or a trucking business or maybe a gym or most any other small business. So day trading is one of the most financially dangerous things you can do. So let's look at some stats. What are the probabilities of success? Well, 95% of day traders lose money. Only about 3% of day traders are consistently profitable, according to basic internet search on the subject. About 80% quit within 2 years, many within months of starting to trade. Why? Several reasons include insufficient capital, unrealistic expectations like turning $1,000 into $1 million quickly, poor or no risk management, lack of experience, emotional discipline, access to a continuous learning process, and or a community and or a mentor, no business plan, or no trading plan. And in my opinion, no clue as to the fact that most successful traders have between a 30% to a 60% win rate. Again, study Christian Kalamagi and others like Mark Minervini or Stan Weinstein, Or go online and look up Trader Lion interviews on YouTube, and these traders who are successful share what their win and loss rates are. So let's compare trading to some other businesses. Restaurant businesses generally are seen as risky, and of those, 17% fail within the first year, 51% fail over 5 years or more. Why? Because of poor management, poor financial planning, insufficient capital, trends in eating, the local market, and experience in business. Many, as we have seen on TV, enter the restaurant business or bar and grill space with little to no experience. Independent truck owner operators, also considered generally risky, have a low success rate. 85% of new businesses fail within the first 2 years. They underestimate operating costs like truck payments, they get in debt, they have maintenance costs, fuel costs, insurance, and have cash flow problems. In general, small businesses across the country, success varies by industry. About 80% survive the first year, 70% survive 2 years, and only 50% survive 5 years, and 30% survive 10 years or more. These reasons include cash flow issues, market demand for that service or product, poor planning, inadequate marketing, undercapitalized, and the usual suspect of debt load. So if you compare, businesses of different industries to trading, trading has quite a high failure rate. So how can we use this information? If and when we decide to enter into any area or business, we must take into account the risks associated with that particular business or occupation and decide for ourselves if it is worth the risk and worth the reward. For example, if you can make $150,000 per year, let's say driving a truck, is it worth the risk of that profession? Do you even like doing that kind of work? It ranks as one of the most consistently hazardous jobs. So, if day trading stocks is so risky, why do so many try it, and what can be done to mitigate some of those risks? The short answer is the allure of making it big, making a lot of money, and the human condition of it won't happen to me. The fact is that trading is very difficult, and to be successful, you almost have to go against your emotions to overcome the obstacles of the business. Reference this book is good too. The Best Loser Wins: Why Normal Thinking Never Wins the Trading Game. So your outcomes and your choices will affect your confidence and your emotions. I personally have been involved in the business now to some level, not day trading, but for about 5 years, just so you guys know that. So how my plan came to be and why? Well, it came about a lot through trial and error. I had talked to some other traders. I tried to make something work for myself and my situation. But anyway, I have some very basic rules. I have 3 basic rules in my plan that are non-negotiable, that I can't break them. And then I have a 4th rule that's been introduced also. So number 1, position size versus my account size. I allow my plan up to a 10% maximum position size. So if we limit our risk up front, if the company goes bankrupt or has a large gap overnight, right? I call this gap risk or overnight risk. So I deal with that by using position size. Again, maximum 10%. I don't always go to 10% because you can't lose what is not at risk, right? This is my sleep rule. What will cause sleep loss? And then I also use share sizing for the specific trade, using a stop loss order with a maximum of 15% stop loss, and preferably between a 2 to a 10% loss limit. So I'd most often never go over 10%. If I'm using a 15% stop loss, that would usually be more of a trailing stop after I'm showing a profit. And rule number 3 is we must follow rules 1 and 2. Okay, so that's reinforced. And then 4, reducing risk as soon as possible by either selling part of a position and or raising my stop loss to a break even or a higher point. Many times I'll have a stop loss that's, if it stops, I'll still make a profit. But preferably holding on to a free ride trade, which I explained that in other videos. What is a free ride trade? I don't have time to cover that today. But note, many highly experienced traders who have 10 years or more of experience will use higher position sizes. This will be dangerous for you if you are new or inexperienced, and most experienced traders will not go over 25% in any one stock. It's just too dangerous. So let's take a quick trade example. Let's look at an example where if you had a $100,000 account, and it doesn't matter what your account size is, the percentages is what matters in this example. So let's say we take a trade in Dollar General Company and the stock gaps down 15% overnight after an earnings report. Okay, in scenario one, or trader one risks a 50,000 position size, or half of their account, and uses a 10% stop loss order. This trader would be minus $7,500 immediately, as a stop loss does not protect against gaps after market hours. His account is down 7.5% overall, and to get back to break even, he's going to need over an 8% gain. So that'd be a pretty serious loss for that account. In scenario two, trader two risks $10,000 position size on the same trade. He uses a 7% stop loss order if we're wrong, and his account is minus $1,500 on the 15% gap down overnight. His account is down only 1.5% overall, and to get back to break even, he only needs a 1.52% gain. So it's a huge difference there, where in scenario one, you could probably have a serious loss of confidence. In scenario two, it's almost just like it's part of the game, right? You didn't see the gap coming. You put in your stop loss order. It went under that order, but you're still down only 1.5%. I'm not saying trader one is wrong, but I am asking you, which scenario could you sleep with? And which scenario would you prefer to be in? For me, the answer became very simple. I will take trader two every day and leave the gambling in scenario one up to the people who don't know any better or simply ignore the risks involved. Because scenario two is very manageable. It is easy to gain 1 or 2 or 3%, but enough losses in a row in scenario one and you are out of business. You can only take like 6 or 7 of those losses before you lose 50% or more of your account. And now at that level, if you lost 50%, you would need a 100% gain to get back to break even. That's tough trading, and that's not good for your sleep or for your confidence. Because of these risks and these facts, and by using technical analysis, my trading business plan reflects how much risk I want to take and when to take those calculated risks. If I can stick to my plan, I can achieve success over time and retain or grow my confidence in trading. I know and believe over a series of 100 trades, I expect to make money if I make good choices, and you can too. Can you now see why trading is so volatile and dangerous when you put some numbers to it? Again, account size does not matter. The percentage will affect any account size, any ego size, and your confidence will suffer if you take too many risks and have too many large losses. Let's look at how small wins and small losses can add up to an increasing account size and some increasing confidence. Winning feels good and losing does not feel good. So if we can put together 5 or 10 wins in a row, take some profits, see our account increase, then we can take some small losses and not get too upset and lose our confidence. It's a matter of expectation meeting reality in trading. We know a good trader betting 50% or 500 in baseball terms should expect to make money if his losses are smaller than their gains. It's just simple math at this point. It's easier said than done, but really, if you win $100 and you lose $50 and you have a 50% win rate, you will make money over time. Casinos and sports gambling outfits know this too well, and they put the odds in their favor over time. You win some, you lose some. We as traders simply need to maintain our confidence and put the odds in our favor by taking small losses and bigger wins over a period of time. What else can we do to increase our confidence? Practice makes perfect. You can make time to study 100 charts or companies before you take one trade. A 100 to 1 ratio should get you in the ballpark of a decent risk to reward trade. And if that's not enough, look at 200 charts until you get some more experience and have a better opportunity recognition. And you can also, later on, you can start to input into your platform some searches, right? You can start sorting and segregating by different factors, and that will save you some time. But if you're new, I would like to see you just look at the charts. 2. Start small. While I am confident in using a 10% position size in my account, if you are new or have had problems with trading or your confidence, cut down your position size to less than that, to like 5% or 1% of your account until you gain some wins and some confidence to later increase your position size. There is no shame in risk prevention if you lack confidence. I started rebuilding my confidence after I lost my money by trading just 10 shares of Ford at $8 a share. Now, I don't care what you think about what I do with my money. If that is too small of a trade for you, great. Trade one share of a stock if that is all you are comfortable with. If you're comfortable and can handle it, trade 100,000 shares. It's up to you. It's your confidence and it's your trading account. 3. Use risk management and a stop loss order to protect yourself at all times. Using position sizing reduces a large amount of the risk in the stock market, and using a stop loss order for your trades reduces risks even more if we're wrong, which we will be because we are expecting to be wrong some of the time. A stop loss order will allow you to buy more shares than you otherwise would in terms of risk management. If we had, let's say, a limit of risk in dollars, we would be comfortable losing. If we knew we would win back later on, what would that loss look like for you? So, if you're new, just consider risking 5 or 10 or $20, something small, especially for new and or recovering traders. You simply take your stop loss example of a $1 stop and take that times how much you're willing to risk is how many shares you can buy. So if you risk $10 at a $1 stop loss, you can buy up to 10 shares of that stock. This is called share sizing. It works great and will keep you out of trouble. Again, it does not protect against overnight gap risk. Okay? Share sizing combined with position sizing allows you to take more trades, keeps you in the game, and will allow you to put together some work over time so that you can assess your progress. I would suggest at least 100 trades and being consistent and profitable before increasing your risk levels. Just taking 100 low-risk trades and seeing the results should increase your confidence. If not, this may not be for you. Do you really want to do all of this work? During those first 100 trades, you should be seeing some patterns with not only your progress, but also with pattern recognition. What is a good entry or a not so good entry on the charts? How did I do with my trade management? Is there anything in my stats that stands out, good or bad? Now we can start to refine what is right for us, which setup on the charts works best for me and for my situation. For me personally, because I am quite busy and do not have time to day trade, I find certain consolidations or lower volatility situations work good for me. I can enter a low volatility situation, wait, and when price and volatility expand, I make money when price appreciates or the stock moves into an uptrend. If I am wrong, then I stop out, take my loss, and I'd look for the next opportunity. So in my mind, it becomes a simple game of probabilities and potential outcomes. I just have to keep my losses to a minimum, and if it does get too bad, I always have the choice to stop trading and reassess where things went wrong. One final rule that can also help is if you are a day trader, have a daily loss limit, and whatever that is, stop trading if you hit that limit. I don't really have any guidelines on this one, but maybe 1 or 2% of account size. And if you're a swing trader or a position trader, have a loss limit for the week and or the month as a limit of account size in case the market turns against you and you can quickly recognize that. I believe in January this year, I had about a 1.5% drawdown in my account for that month. Taking better trades. So experience in taking better trade opportunities that work within your plan and your lifestyle for your account size should also increase confidence over time. You will get better over time if you can survive, and if you get positive results, it will reinforce you are on the right path. Remember, confidence comes with doing and getting feedback. If it's positive feedback, your confidence will increase, even if you have a string of losing trades. Confidence comes from positive results and success. Unfortunately, failure is part of success as long as you do not look at it failure as final. Try, fail small, and adjust, and you should make it. Keep going if you're in the game. So here's a quick summary of helpful confidence building. I'll quickly go through this so we don't make this video too long, but start small, right? And go smaller if you've lost confidence for any reason. For example, I lost some confidence when we moved, simply because my mind was not in the market. Any stressful situation can affect your trading and your confidence. Use position sizing and adjust this up and down based on confidence. Use stop loss, use share sizing. Again, you have a loss sizing number, loss mitigation per day, week, or month. Track your progress, right? Where can you improve? Assess every 100 trades. Practice. Look at 1 or 200 charts before taking one trade. If you have good chart recognition of opportunity in the market, then you should be able to pick out some winners. Assessing risk versus reward, right? Is this the best opportunity? You need to make more when you win than you lose. It's okay to stop trading if things are not right. Keep your day job until you are confident. Put the odds in your favor and protect yourself at all times. I turn off the news, social media, distractions, and set aside time to focus on my business, even if only for a few hours a day or the week. Your trading plan as it develops should reflect what factors affect your confidence and your outcomes and your ongoing assumptions, right? What is best for you? For me, it's not best to day trade because I already have income. I don't need income. I'm looking for capital appreciation and building a bigger trading account for the future. Are your expectations in line with your outcomes? Learn, read, and study. What does a successful trader look like? There's several good trading books out there that I have recommended in other videos. Ask for help. Ask questions. When I was younger, I asked quite a few questions of other traders online and in person, and they were really friendly to me. They weren't jerks about it. And if they didn't answer an email or didn't answer me, well, I just figured they're too busy and they just didn't want to take time. That's okay. But try, take action, fail, and adjust, and then lose small and win big is some of the keys to success. So let's look at some charts. I'm going to take a drink of water. It is up to you to decide which opportunities are best for you. So let's look at some, let's get to our chart portion of the video. So Bitcoin is kind of its own market. It's not really a stock. It's just kind of, refers to Bitcoin. But in this chart, we can see here where we had an expansion up, expansion down, another expansion up, and then expansion down into this downtrend. And then you can see the candles got quite small, right? This is a contraction period or a consolidation where volatility went down, price contracted, and even the volume went down. Look how the volume went down on this chart. Look how the volume went up for this expansion. The volume was up. And then through this contraction, it started to move up again. And you can see the buying volume picked up. Price started to expand again, right? And then we came into another contraction period in 2024, where we had an up month, a down month, up month, down month, up month. And this went back and forth for like 6 or 7 months, right? Then we had another expansion in price. We did not have that expansion in volume, and then we had a contraction, and then we had another expansion to the upside again. So this is just simply how markets work. Now this is a 5-year chart, so it's very easy to see these trends and very easy to see these stages in the expansion and contraction and money moving in and out of these markets on a longer term chart. So that's kind of what I like to use. So that's how I would look at that chart. Here is a chart of the S&P 500 ETF SPY. You can see some similarities and some differences between this and Bitcoin, right? So here we had an expansion to the upside, then we had a stage 4 downtrend in 2022, right? Then price and volume expanded to the downside. Look at the volume pickup on this when it moved down. Okay, then we had this contraction over a period of about, again, 6 or 7 months. Price contracted, the candles got smaller. Then we had a big volume expansion here, and then after that, price expanded to the upside. Then we have what I call a buy setup or a 3-bar turn here. And again, price expanded to the upside. Volume also kind of expanded, but then it contracted. So you don't always need volume for prices to go up, but it is interesting to look at how, sometimes most times when price expands out of a contraction, volume will generally also expand. And then price can just simply keep moving up on low volume. Recently, we had this 3-bar turn buy setup in April, where we had March. We had February. March was a down month. April was down and then came right back up, left this bottoming tail, which to me is like a demand bar, a symbol of demand, on heavy volume. And then from there, price increased over the next 5 months. We just made a new high this month. So that was a very interesting chart to see that. You can see money flowing in and out of this S&P 500 market, right? You can just see the emotions. And, just imagine your confidence. Let's say you bought up here, and then, 2 months later, your account's down, right? That would probably give you a loss of confidence. Okay, so that's it for that one. Here's the NASDAQ market, ETF QQQ. Again, we can see volume expand, price expanded to the downside. Then we kind of had what I call a 3-bar sandwich, where you got a green, red, green, and then the price expanded up. We also had another buy setup here, another buy setup, and finally this April, this buy setup this year, which basically mirrored the S&P 500 market, right? And you can see volume expanded to the downside, price expanded, and then price expanded up, along with volume also expanded to the upside. So this is why I said last month we're still in a pretty bullish environment. It looks like that has continued. One caution going forward is because we've been up here about 5 months in a row, 5-6 months in a row, is I would expect some sort of pullback here before the end of the year in these markets. I don't know how much or how little, but that's kind of what I'm expecting going forward, is a little bit of a pullback in the markets here through September and October probably. And then probably an end of the year rally is kind of what I'm expecting. So here's another market, the Russell 2000, symbol IWM. And what are some differences in this market versus the others? Are there any high probability, high odds, low risk opportunities that you see on this chart? What other patterns do you see on this chart? What emotions are involved with the bottom tail bar in April of this year? Would you have confidence or a lack of confidence in this market if you bought it 5 years ago? Would you be able to hold through all this back and forth? So that's just an interesting chart to me. Definitely a different look than the S&P 500 and the NASDAQ, because this is more small to medium-sized companies in this index. Here's a symbol of the Dow Jones ETF. This is a 5-year view of the DIA index ETF. Can you see the contraction and expansion and supply and demand? So you can see here the expansion and supply coming to market. Then we were flat for about a year, right? This contraction. Then we had another expansion up in price and demand with more green than red volume. We also had the same buy setup here in April this year, and then the industrial Dow Jones Industrials are at new highs at this time. So kind of interesting there. Here's the transportation average, symbol IYT. This one looks a little bit different than the other ones, not quite as, not a very smooth uptrend, but over 5 years up overall. And I just put that in there because that's another one that I track. So I'll leave that there. You guys can look at that on your own just to see were there any opportunities in the transportation ETF or any transportation related stocks. So let's get to some other sectors of the market here for this month. Here is the real estate sector, symbol XLRE. And I just put this in here because you can see this downtrend, sideways trend, and then we had to move up, move back. Nice bottoming tail in April, right? And then we've had a consolidation or a contraction price over the last 5 months, and now we're starting to see some increased volume here in the real estate sector. So I think this is going to look positive for real estate over the next 6 to 12 months based on that chart. Here's a chart of the consumer staples, XLP, trading up here near, within a few percentage points of all-time highs back in September of last year. This has been more of a back and forth market, right? You can see it going back and forth, wide range bars. And over the last, 3-4 months, price has contracted to some level. I don't like this bottoming tail here. This topping tail. And I don't like that we're seeing increased selling volume. So this is one I would use some caution on as far as the consumer staples sector. It just doesn't look very good right now. Now it is up near all-time highs. It may turn around and go higher for the end of the year or next year, but right now it's just in a sideways pattern. So here we've got a chart of communications sector. This is a very clean looking chart, right? Very clean looking chart. You can see the difference between staples and communication. This is just so easy to read, right? You can see the uptrend, the downtrend with expansion of price to the downside, expansion of volume. Then we had this low, and we had this turnaround, and then we had this contraction here, and then we had this expansion to the upside. Again, look at these 5 months of increased green volume. Then we have this kind of decreased volume for quite a period of time until this April, which left again a bottoming tail, which indicated that most likely price was going to go up from here, and that's what happened, right? We just made a new high in communications, but very smooth looking, very easy to see that trend in the communications sector. The materials sector is a little messier, more back and forth. Since April, this has been uptrending since April, but not as strong as the other markets. Here's this chart of the XLI industrial sector. Sideways for a long time. Then we had this nice tight consolidation over about 6-7 months. Price expanded up, came back and tested that area, and since that time has been on this nice uptrend since late 2023. And then again, this market, like all the others, did react this year to this pullback, left a bottoming tail, and since that time has been in this uptrend. New high in July. So industrials look pretty good year for industrials. Utilities, similar picture, very similar chart. You can see the differences and the similarities between this and the other charts. We just made a new high here in August, so that looks pretty positive for utilities. The technology sector, again, a very smooth chart. We can see, over the last 5 months, very positive. It looks like it's going to round over. Probably we've got some volume coming in here. I would expect this chart also to pull back with the market in September, October, and then look for some opportunities towards the end of the year. We'll see if that plays out. Here we've got the healthcare sector, which is traditionally more defensive, just like utilities, but you can see the uptrend, sideways trend for, what's this, 22, 23, almost 2 years plus. And then we finally had an expansion late 23, pullback, expansion, made a high in late 24. This is a market that has not recovered versus the other one. So this would be relatively weak compared to most other sectors. For some reason, healthcare has just not recovered like the other areas have. I would say these last 2 months have been positive with expansion in volume, slight expansion in price, but still, this could be a lower high too. So we don't know until we need more evidence on healthcare to make a decision there. Consumer discretionary, again, very pretty good looking chart. We got the uptrend, the downtrend, kind of this rounded bottom. We had, the red, green, sideways, green, expansion to the upside, expansion back down, and then expansion up. And then we had this period of sideways back and forth trading, and then a bottom tail. After that, price expanded to the upside, left a topping tail, then prices expanded to the downside. And since April, this consumer discretionary has been on a very, very nice uptrend. So it's getting up here near the highs. Again, I would expect a slight pullback in these before a further advance in discretionary. Financial sector, pretty smooth looking chart. You can just see the expansion, contraction, expansion, contraction here, then expansion again to the upside. Again, bottoming tail in April, and since then financials have been on the uptrend also. So that looks positive. Energy, again, is a little bit different looking than the other ones. Much more sideways price action in energy. I don't like this new high way back in March 24, then a lower high, with a red bar. Again, another lower high with a range expansion bar to the downside. This looks more like this is going to roll over and sell off. This looks relatively weak to me versus all the rest. This energy sector, I don't know why, but that's what it looks like at this time. Finally, that was our sector analysis, quick sector analysis. Let's get to some individual stocks that not so much, trading suggestions or trading opportunities, but just get good at looking at different sectors and different charts. This one, Ryder System, has had this nice, uptrend to sideways trend, a new uptrend for the past 5 years. So just made a new high. So that's an interesting chart to me that's been able to just kind of, just keep on trucking along to the upside over this whole time. How about Celsius Holdings? That's different looking than Ryder, right? We had this, contraction in price. We had expansion to the upside. We had this pullback, big igniting demand bar, and then a topping tail. So, whatever was bought here was sold here and then sold again. And so this just went into this downtrend since last year. And finally, since about April 25, has kind of made this move up, where it moved up, went sideways, moved up, went sideways, and then moved up in August. And now in September, we're getting some selling to start September. So that's a little bit different looking chart than the rest. More of a cup, and we're looking for that handle, a nice consolidation or something over here to buy into. Uber Technologies, right, back and forth, downtrend. Pretty much been in an uptrend since mid-2022. So this has been a pretty nice stock to be in, although this period was back and forth. Since, really about February of this year, this stock has really had a nice run this year in Uber. So made a new high in July, got near the highs in August, and now in September we're getting an inside bar so far. So Uber, they're a pretty interesting looking chart on Uber long term. Lyft is definitely different than Uber, as it's had relative weakness over the same period, right? You can clearly see here stage 2, stage 3, stage 4 downtrend, and stage 1 sideways trend since mid 2022. So we definitely have had some volume spikes in here as far as buying goes, but those have been sold into, right? We had a buy-in spike here, and then that was sold into. We had another buying spike in volume here, and that was sold into. Recently, we've had even more buying. They tried to sell into it here in June and July, and it looks like August the buyers came right back and were able to hold prices up. So I actually kind of like the chart of lift going forward as a maybe a possible early opportunity out of a stage one, possible stage two. So that that's an idea. Dollar Tree had a nice run this year. Actually, since late last year, has had a nice run. It's pulling back here these last 2 months. And we'll see if this can give us a nice buy setup, right? So we'd be looking for pullback, maybe a smaller pullback or a bottoming tail here, and then follow that with a nice green bar. Give us that buy setup that we're always looking for. And I would buy over, maybe this 110 area. Just an idea there in Dollar Tree, but we have to be careful because this could be a lower high versus this area. I don't think it will be because this is some pretty strong momentum off the bottom. So I kind of like Dollar Tree going forward for the next year or two. Robinhood Markets, one of the definitely a stock that's followed by a lot of people. Again, you can see this consolidation for years, and then price expanded, volume expanded, price pulled back, volume pulled back, and then price expanded again, right? And then price pulled back, volume didn't really pull back that much, and then it just ripped out of this area since around March, April this year. So if you were in that one, that was a definite big winner in Robinhood Markets. It's, in my opinion, it's too high up here to buy right now. It needs to contract in price and volume before I would get involved at this time in Robinhood. Boston Scientific, a little bit different looking chart again. Very smooth trend to the sideways, then it moved up, sideways, and this has been an uptrend since September, October 2023. This has been an uptrend for like 2 years and really didn't sell off much at all this year, even though these bottoming tails, that was selling, but it was immediately bought up. So this one I like, probably one of my favorite trade ideas right now because you can just see this consolidation. Price is tightening up, volume is pulling out. Volume pulling back. I'm looking for an expansion in price out of this area to the upside. This seems to be a very strong company at this time. So I like that for sure. Lightbridge is a lot crazier, newer company. And you can just see these points on the chart where it just gets sold into. But finally, in 2024, things calm down. You can see the expansion here in price. It's wild, it's whippy, and then you get this contraction. And so at this time, I would have expected maybe a sell-off, but that's not what happened. What happened was price expanded to the upside on big volume. And since that time, this has been in a pretty wide trading range, but an uptrend nonetheless, right? And recently it's tightened up, except for August. In August, we had this another range expansion bar, but so far September, we've got a pretty tight candle there so far. But I would like to see this tighten up even more over a month or two, and then maybe I would consider getting involved. I like that volume is trending down on these pullbacks, right? Volume is not expanding to the downside. So I do think this is just a consolidation in Lightbridge. So that's a possible opportunity going forward. Apollo Commercial Real Estate. Again, real estate had been in a pretty long downtrend. It seems like that sector is maybe turning around at this time with a bottoming tail in March or April. And then since that time, just a very slight uptrend in real estate. Not huge range expansion candles, although here in August we had a little bit of a range expansion. And now it looks like in September that's going to continue up. So I would have high expectations going forward for real estate in general and this Apollo Commercial Real Estate as a potential idea. American Public Education. We made a high point back here in 2021. Since that time, it had a major sell-off, stage 4 downtrend, went to a tight consolidation where price contracted, volume contracted big time, and then since that point, we've had price expansion, almost volume expansion, and more interest in the company. You can also see here we had this, this 3-month pullback. And then as it pulled back, yeah, volume increased here, but then it just dried up. And then again, price expanded and volume expanded a little bit too. And then price went sideways for 5 months on, pretty average volume. And then, volume expanded again and then price expanded. And now for the last 4 months, we've been in this sideways consolidation or contraction period, along with volume declining during this contraction. So I like this going forward. This looks very positive as far as the chart pattern goes for American Public Education Company. Here's another one, Pagaya Technologies. Big price expansion after the IPO. This was crazy. This went from under $100 for sure up to over $400 a share, and then since that time, it's just been flat as a board. Although we've had some expansion in volume and interest recently, and a slight expansion to the upside in price. So I do like this going forward, but I would say it could be a volatile stock, so be careful with that one. I don't know much about them. So after the charts. So for me, confidence comes from being able to easily read and interpret price and volume charts and make a decision with confidence to buy, sell, or hold any market or any stock. With charts, we can put the odds in our favor by reading the stage we are in. Is there an area of contraction where we can take a low risk, higher probability trade to profit from expansion to the upside or downside movement of any market? And if we are wrong, do we use money and risk management and trade management to mitigate those risks? In my opinion, these are foundational concepts, and if you can avoid the noise and follow your plan, you can succeed. If I can do it, so can you. 5 years ago, I did not know what a stop loss strategy was, and I had never heard of a market stage or a trend or what supply and demand in a market even looked like. And I certainly did not have the confidence to use and implement a trading strategy. But the driving force behind my desire to break out of an average life was working hard and not having a whole lot to show for it. I worked hard. I tried to do things right, but because of a lack of financial discipline, I had always struggled. Now I could go and blame others or the system or the government, but I chose to change my future with a financial spending plan, some discipline with my money, and take advantage of my opportunities instead of blaming other people or other stuff around me. I hope you also find success by looking in the mirror and doing something for yourself now. Don't wait. You see, I always knew about the stock market and read about opportunities in the markets. How many of you have ever read an article in print or online to the effect of if you had invested $1,000 or $10,000 in a company today, you would have, $100,000 or $1 million in your stock account? It always kind of just angered me, those articles. I don't know why, but it did. Several examples in my life include, but are not limited to, Amazon Company, Apple, Walmart, Nvidia, Netflix, Google, etc. Right? These are all companies that have went from almost nothing in my lifetime to major companies. I had never used discipline and saved $1,000, let alone $10,000. And to have the further foresight and discipline to not only pick these winners and hold on to them was seemingly impossible. This made me angry that others did this. I did not, and so this is where my journey began, out of frustration. I changed my mindset that there is more than enough wealth anyone can access if they choose to do so and know of the opportunity that is available to them. I made a budget, I made a spending plan, then I had an investing plan, and finally a trading plan, and I have not looked back. Today I'm financially better off than most. My kids and grandkids have investment accounts, and life is much more enjoyable when you have some goals. I hope to pass this information on as a way of giving back, as I did not do it alone. Thanks to those who supported me in helping along the way. May you also have peace and prosperity in your life as I have, and may God bless you. In closing, please invest in yourself and then invest in the markets. This business is not for everyone and does have a very high failure rate. You need to put the odds in your favor, and to do so will require some study, some practice, some patience, some experience, some resilience, some losses and some wins, some luck, and maybe even some help or some additional training or courses. I do not have anything to sell at this time, but a course for purchase is in the works. This video series essentially is my course, and I hope you find value in the work I put into it. Again, my contact is Phil at Laptop Trader, channel on YouTube. Good luck to you. Again, this is my contact information. And again, caution, most stock traders lose money. Please protect yourself at all times. Please seek help if you need help investing. Again, my email, laptoptraderphil@gmail.com. And I will see you guys in October. Take care. Goodbye.